All right, mate. I think I got it.
Yeah.
I'm just going for it at the moment. Yeah. Oh, how you been? What you been up to this week?
This week started off a little slow. Obviously, I had the wedding over the weekend, so nice and steady. Didn't have much to do, and then so I took Monday off because the wedding was on Sunday. So that was a nice chilled out weekend, extended weekend, and then Tuesday back to work. Steady day, like nothing too strenuous. Nothing is very strenuous at the minute. It's all steady. Today I've been messing around in Python over the last couple of days. It's
all right, that coding stuff.
Yeah, it's strangely familiar from uni, so just trying to build something to speed up some of the boring tasks.
Yeah. Fair enough.
So,
what have I been up to?
Yeah, what have you been doing?
Well, to be honest, really, I've just kind of been bumming around really since we've done last podcast. Been doing bits and bats at work. I'm going through a bit of a quiet patch. I've just been proofreading my book, and yeah, it's been pretty quiet recently.
Yeah, I don't feel like much has happened over the last week. Certainly not in my life, anyway.
No, definitely
not. Right. So
it's on you to lead it this week, Nick, because I don't have the OneNote that I can open up. I've literally just got my phone and it's bouncing around like I don't know what.
Okay. So let's see.
News, right? What's been in the news?
Yeah.
Well, there were them attacks today on the a couple of tankers over in the Straits of Hormuz, right? Did you catch that?
Mate, I rarely look at the news like.
You rarely look at the news?
In that kind of news, like, it's just, I don't know. I don't get much value out of it.
I don't know. I mean, it spiked oil up by nearly $2 a barrel. Did that today, just from a couple of torpedoes that hit a tanker. And I mean, that's pretty big jump, really, when you think we're only at what 60 odd dollars a barrel at the moment. I think it's 62.
Yeah, 4% ish.
Yeah, roughly. So I mean, like, it's a fairly big movement, and then you obviously got the whole Trump fiasco still ongoing with his old trade war against the Chinese.
What is going on?
And then
what is going on?
I don't think even he knows what's going on, to be honest. He's just kind of talking big, and then no one's really following through. Well, I mean, he's followed through with some massive tariffs, hasn't he? But I don't understand what the end game is, because I don't think either of them are going to back down. It's just going to end up ballsing it up for everyone.
Yeah. Well, we had some news. Trump was in the UK. Since the last podcast, he was here. He's gone again. Yeah.
He's gone again. Byron did a little stint there, didn't he?
I don't know what he did, to be honest.
Yeah.
It can't have been that interesting.
Well, just a state visit, wasn't it? So he'd seen Queen, seen Prime Minister.
Yeah.
Promised a bit of hot air, and then off he went.
Yeah, I know there was some news about a trade deal with the UK. He made the comment that nothing was off the table.
Yeah, something like NHS. He basically wants to sell all drugs to the UK for their private health service that we're going to end up being in a couple of years' time.
Yeah, we'll see.
Yeah.
We'll see. So I guess that wasn't that interesting.
No.
In terms of stocks and shares, or just the general market, I sent you a link to, what was it? Neil Woodford.
Oh yeah, Mr. Woodford. Yeah, he's been in the news this week, hasn't he?
Yeah.
He's had an absolute blinder by the looks of it.
So I guess Mr. Woodford launched a fund 5 years ago. It's his corporate headquarters are in Oxford.
Are they in Oxford? I thought the company were registered over in Jersey somewhere.
His company's in registered in
a
Jersey.
Tax haven.
Yeah. Well, however they do that, right? Maximise the funds.
Yeah.
But yeah, his headquarters are in Oxford. So yeah, I guess he's been a bit of a glory trend picker or can
Well, yeah. I mean, he had a what?
a hot stint?
A hot stint after the financial crisis. Anyway, we were getting sort of like 10% returns and up to 18% returns
Yeah,
with stocks. And then he went private, did his own thing. People followed it, threw some money in. And then I think, from what I understand, is the last week, well, not the last week, but the last couple of months, he's not really been performing that well since the turn of the year.
yeah. It looks like
Uh,
quite a general downturn.
yeah. So because of that downturn, a lot of people have been wanting to withdraw the money,
Yeah,
and because he's invested in markets and equities and shares that are not totally liquid. So that basically means that it's not readily easily available to withdraw your money from it. It's come back to bite when people have asked to take the money out, because it's basically done a sort of like not fire sale, but mass panic, where everyone's going to go to their fund to take the money out because everyone else is taking it out and it's dropping in value. And essentially, it can't give everyone the money back
quick enough
because
because it doesn't have it accessible. Right, okay.
it's tied up. It's tied up in these illiquid funds. Well,
Yeah,
funds and sort of private not PLCs, but you know what I mean, like cartels and stuff like that.
yeah.
So
So it's not easy to sell shares quickly.
yeah,
Uh,
yeah.
okay.
And then essentially, so he's locked his account in order to redistribute his portfolio. But I think when he opens it up, it's just gonna same thing's gonna happen, and I think an absolute load of people are gonna rush on, click on, and say, right, give me back my money. I don't want this anymore. I'm out.
Yeah,
And then you got quite a lot of people complaining about it, saying, "Oh, I didn't know this could happen. Why has he not done? Why has he not told me this before?" And it's like, well, I don't know if you've been silly enough to invest in a fund and not know the risks that it might not return as good returns as what other people in the market, especially when there's a downturn.
yeah.
Then you've got to accept some responsibility there, aren't you, for your negligence not to brush up on the subject.
Well, I think yeah, that people are quick to blame now, aren't they, in all walks of society? And
Yeah.
I think yeah, you don't really have a leg to stand on when you've handed over all responsibility of management of that fund. That is literally what they've
Hmm.
done. Like that is what they agreed to do. They've invested the money. They were, I guess, they're feel a little hard done by the fact that now they want to withdraw their money. It's kind of stuck. So I don't know whether
Hmm.
that was clearly dictated that he was allowed to do that.
I don't know, because surely if they trusted him when they initially put it in to make good returns, then surely they should trust his judgment now to save their money the best way it can. Because, like, if he tried to sell all the stuff now to be able to provide money for everyone that wants the money back, it's just going to get a terrible price because everyone knows he's in a vulnerable
Yeah,
position. So they're going to they're going to lowball him, and he's going to have to take it because people are going to want the money out, and then everyone's going to get far less returned to them than they initially put in. Do you know what I mean?
no, I understand that. I don't think that's the point I was trying to make. It's like it's obviously you can't complain that. I guess it's not really clear from the article that we've read whether basically what the T's and C's are. So whether it's like if they said, oh yeah, you're in a fund but you can withdraw whenever, and they weren't aware
Hmm.
that Neil could lock this down for an unknown number of months when they might want access
Yeah,
to it. Like
that's probably true, but
I
I
can
mean,
understand why they might complain about that. I don't know if they were
yeah,
complaining about that aspect of it or whether they wanted to withdraw just because it was in a bit of a having a bit of a stumble.
bit of a
Yeah,
dire state. Well, I reckon a lot of people might have just not even looked at like how a fund works and how it operates, and like Googled how whether or not you can take it out straight away. There's certain conditions where the fund can close and you can't take your money out. I think people have just seen, oh, he's getting 10% or 15% returns. I'm just going to throw my money in and he'll do the rest.
yeah,
And you're not done any research before you've thrown it in, so you kind of still are like responsible. And I can understand that you're saying some people may feel annoyed and betrayed that they now can't withdraw the money.
yeah.
But the banks did the same thing for the financial crisis with regards to Northern Rock, didn't they?
Well, that was it, wasn't it?
Mm.
But yeah, um, it's interesting either way. It's just it was
Yeah.
it popped up straight after we'd had the talk last week on funds and fund managers and different types of funds. So it was just it caught my attention.
It's a shame. Yeah, it's a shame, really. Well, I say it's a shame. He's probably making absolute thousands of pounds from it at the moment, but his reputation like been left in the absolute pits now after like spending the best part of 2 decades building it up.
Yeah. So I guess that.
But it's the game you play.
Yeah. So some of the facts here were that people were withdrawing their money at about £10 million a week, and the issue is that unlike a bank, it doesn't have all the money. It's all invested. Like there's very little liquid, like to just drop out.
Yeah.
So yeah, I think you said fire sale there. Yeah, that's a kind of a key word. We could do with a definition for what a fire sale is. So
it's just I guess it's where you just sell at any price in order to try and at least recover some form of capital.
Yeah. So yeah.
So as soon as it starts off as a little spark, doesn't it? And then like once one person does it, it'll be like, oh well, that person's took it out and they're really famous for great investments. They're taking it out, and it must be going downhill. And then suddenly everyone panics. Everyone rushes to the place to withdraw the money, and then it just tanks, doesn't it?
But either way, like they enjoyed the 18% early on and 10% there.
Yeah,
like,
they did, didn't they?
Yeah.
Well, the early people that got in initially would probably enjoyed the 18%, but they'd have been smart enough to get out long before it started dropping.
Yeah.
It's like Bitcoin, innit? The masses turn up too late, and at that point, it's already in decline.
Yeah. Well, that's the news for this week. Unless you've got anything else.
No, not that I can think of off the top of my head.
Right. So this one's going to be a difficult one because I know you did a lot of the research on it. So our topic of the week was to talk about the lifetime ISA versus the help to buy ISA.
Yes.
And with regards, or certainly a swing towards obviously buying your first home.
Yeah, I think that's for the main sort of thing for people our sort of age. If you're looking at retirement, it's not really averse to each other, is it? To be honest, because it's a lifetime ISA.
Two different things.
Pretty much, yeah. 2 different purposes for it.
Yeah. So I mean, I could put these graphs up on if I'd have organised myself a little bit better. You found some quick information on this, though, didn't you?
Yeah. I pretty much, once we decided we were going to discuss it last week, I went out, did a little bit of research the next day, found up a good comparison sort of table that broke it down, and then did some quick numbers with regards to a 5-year period of either using a help to buy ISA or a lifetime ISA. Yeah.
So, I mean, side by side, I'll reel off some figures. Well,
I think the main things you want to do is highlight the differences between the 2 types of accounts first.
Right.
So, for a lifetime ISA, you're allowed to put in £4,000 a year, and then the government will top up that £4,000 with 25%. So that's another £1,000 if you put the full limit in for each year. Yeah. And the important thing to know with that is that $1,000 you can pretty much invest it straight away, and you can gain interest on it.
Well, the other point to make there is that if you came into a lump sum that was £4,000, you could just invest that straight away. Whereas, in contrast to the help to buy, where you have to pay in every single month, and if you miss a month, you don't get the bonus.
Yeah. So the help to buy ISA, from what I understand, is when you first initially open up the account, you can put £1,200 there on the spot.
Yep.
And then each subsequent month you can put in £200. So just topping off my head, that's what,
3,400 in year
400 for the first year. But the second year it's active, you can still only do the 200 a month. And like you said, if you miss a month, you can't go back and essentially top up another 200. Yep. Now, the government, they do provide you with a bonus, but it's a different sort of way compared to the lifetime ISA. Instead of just giving you the 225% straight up every time you invest, they essentially lock it all up until you are using your lump sum in your help to buy ISA in order to buy a house.
So yeah, my understanding on that is the solicitor has to apply to the bank to release the government bonus when you're making the house purchase. It's very different to the lifetime ISA, where you are essentially paid the 1,000 at the end of each year.
Yeah. So I think that's the main thing, is that you can get the lifetime ISA bonus to work for you as soon as you get it.
Yes.
With regards to interest or dividends or capital gains, while the bonus with the Help to Buy ISA is basically off limits until you are purchasing your first home.
Yeah. So immediately you've already got interest on your lifetime ISA bonus, but you're not getting anything. Like it's a fixed fee at the end, providing you put all your money in up front, essentially.
Yes.
Yeah.
Yes, that's correct. With the Help to Buy. So, and there's also the fact that you can put in more each year to a lifetime ISA. So that's obviously great if you have that capital lying around that you can actually invest and put it in, and you can get more of a bonus from the government, as opposed to the Help to Buy, where it's, like you say, it's capped to 22,400 each year after the first year, where the first year be 3,400.
Yep.
I think it's also capped as well, right?
It is.
The Help to Buy.
Yeah. So
the Help to Buy is capped. 12,000 is capped at, so you can get a maximum of 4,000 bonus.
It's less. It's 25%.
Oh right, shit. Sorry, it's only 3,000 then. Yeah.
Yeah. So you're only gonna come out. Maximum contribution is what, 12,000 plus the 3, so you get 15,000 towards your house.
Yeah.
If you abide by.
Plus any interest. Plus any interest that you've made on the 3 years, 4 years for the Help to Buy.
Yeah, and I mean, that interest is going to be minimal, because you can only get interest on what you put in.
Yeah, they're only the capital, not on the bonus. Yeah. So I think when I had a look at the numbers,
it's not just the capital, though, is it? If you think about how you would do them both, if you had the money up front rather than trying to save each month, let's say you did have some spare cash and you paid 2,400 into the Help to Buy, you can only pay it in at £200 a month. So you can only get interest each month on 200.
On the 200 plus whatever are already in. So it's a much weaker return compared to the lifetime ISA, which you can get in a chunk and straight away if you can, once the tax year opens, and throw it down.
So get it in there, get your £1,000 bonus, and get that invested, because you could really see some big
some nice returns.
Yeah.
I mean, if you just give the figures out after 5 years that I basically come up with. So I think if for 5 years you'd have invested 20,000 into the lifetime ISA, but your pot would have been worth how much?
So I'm just looking at these. So the Help to Buy is, you would have invested 13,000 in the. Is that right?
12. You'd have invested 12,000.
Yeah, I think we've got a mistake on our graph. It's 12,000. Your bonus would be 3,000, and you may. I think you've done it on about 2.5%, which is the going rate at the minute.
Yeah.
So you'd have about £1,136 on top of that.
So about what, 16,000 in total then? You'd have made after 5. Well, your pot will be worth after 5 years.
Yeah.
In the Help.
16,000.
16,000.
Yeah. And then, so the same for a LISA, or the lifetime ISA, at the same 2.5%, which you're skeptical about, but let's try to keep things even. So
I'm not skeptical. I think that's quite easy to maintain. I mean, if you get it in a dividend stock,
you think that's quite low.
I think that's very low.
That's what I'm saying. Like, you're skeptical about the 2.5% because you've also run it at 6%. But yeah, so if you'd invested the at the same rate, over the same time, you'd have £20,000 in your pot as your capital.
That you'd have put in, that you've invested.
You'd have a £5,000 contribution
from the government bonus.
That would be at 2.5%, £1,700 on top of that. So that's 26,700 in the same time frame. It's almost £10,000 difference.
Yeah, for sure. Which obviously, if you're using it to purchase your first house, I guess it's a no-brainer, providing that you can throw in the 4,000 each year into the lifetime ISA.
And
I suppose the other benefit about the LISA as well is you don't have to stop at 5 years, do you? You can essentially roll it on to 10 years if you really wanted to. While as the Help to Buy, it pretty much shuts itself down once you get to the 12,000 input mark. So essentially, any time after that,
stagnates.
it's just stagnates, doesn't it? The growth rate completely drops
Yeah.
off.
So I mean, you could put that money to one side somewhere else, but literally you're not getting any benefit from doing that. You might as well get the lifetime ISA.
I definitely think from the research I did, the lifetime ISA was the winner majority of the time. The only time that I came across when the Help to Buy ISA came out on top is if you was planning to buy your house in less than a year's time, so maybe like 6 or 7 months.
Right.
Simply because you can't actually take out any money from the lifetime ISA the first year that it's open. It has to be in there for a year. It's basically locked
Right.
up.
Okay. So that's the stipulation on the
Then
lifetime
after that,
ISA.
you can
Yeah.
yes. The first year that you open the account, you cannot take it out. Whereas the Help to Buy, as soon as you've reached the £1,600 that you've contributed to the Help to Buy ISA, you can then basically use it to buy a house there and then, which is what, after
3 months?
6 months?
Because you can do the 1,200 straight
3
out
months?
there. Yeah.
Yes, you can do the 12 months. So you can do the 12 yeah. So it's 3 months. So you can get the £400 government bonus. That's probably the only case where it's if you're buying the house now, yeah, by all means, I'd say use the help.
Yeah.
If
you're planning on buying within the first kind of 12 months of saving, then yeah, crack on. But it's not much, is it, that you've got saved there? Like, you got two grand.
No,
You're not going to be buying many houses.
I guess not. But if you got two people that are both doing that in order just to get a bit of free money from the government, then every little helps, right?
If you want to move quick, sometimes.
Yep.
So
yeah, I think the lifetime ISA definitely trumped the Help to Buy ISA in that front. And then I kind of did some more sums with regards to building it over the full duration of the maximum time period that you could have the lifetime ISA. So that would be open from 18 years old to, is it 50?
Yeah, so you can contribute until you're 50, but you can't actually draw it back till you're 60. But in that 50 to 60 time period, you can still pick and choose your investments. You still get interest. You just don't get any more bonuses.
Yeah, you just can't contribute anymore. So that's already 32 grand that you're getting just from bonuses if you put it in for the full duration.
So just like emphasise that point that that's £32,000 worth of free money.
Yeah, £32,000, and that's just one person. Like if you've both opened an ISA when you were both 18 years old, say if you're in a partnership with someone else, and then you get to 50 and you want to decide to buy your first home, then you've already got £62,000 there just
free
in
money.
Sorry, £64,000 just in free money from the government, which is ridiculous.
I mean, you kind of it's not free because there's some kind of ties to it where you're contributing a certain amount, but essentially you're not losing it, and it is essentially a bonus.
Well, I mean, it's like buying a pint and then getting a quarter of a pint every time you buy a pint, right?
When you put it like that, yeah.
You still got to buy the pint to get the extra quarter, but I mean, if you were going to buy the pint anyway, then why would you not take the extra quarter?
So every 4 pints you get a fifth pint free.
Yeah, essentially, yeah.
I'll drink to
that. So the numbers that I got, I think it was you get 32,000 in bonuses, so it would be 128,000 in contribution that you put in.
Yeah, 128,000.
128,000, yeah, over the course of 32 years.
So,
and then 32,000, so that puts you at 160,000 money. And then I think with the growth rates, interests, I had 2.5%, 6%, and then was it 1.1?
The 1.1 would give you £31,000. The 2.5 would give you 73,500, and the 6%.
But this is purely from investing returns, right? With regards to interest.
Yeah, that's just the interest on top of.
Yeah. So 73,000 on top of your 160 odd thousand. So you're already at 250,000 now, pretty much.
And then the 6%, you're essentially getting. There's an additional £320,000 just in interest. So it's 128,000 plus your 320,000 plus another 32,000 in bonuses.
You're looking at nearly £500,000, aren't you? Basically,
shy of £500,000.
Which is not bad.
House.
That's before you even take into consideration capital gains or anything like that you could have made from buying and selling shares whilst you were making your 6% on dividends, or
Yeah, if you're making
funds,
6% on your dividends, that's great, and hopefully those companies that you've invested in will be more valuable in 50 years' time than.
Yeah, 30 odd years' time. You would assume so, wouldn't you?
So, yeah, no, it was a very interesting exercise.
So you basically, yeah, for sure. I mean, if you've got a pension and then you have that on top of it just to like tick you over, you're probably going to be laughing, really, aren't you?
Yeah. So, well, that would be for retirement, wouldn't it? When you're looking long term.
I guess at that point, you're not. I think the limit on the house that you can buy is 260 odd thousand and 450,000 in London for the lifetime ISA for your first home.
Lifetime ISA is 450,000 flat out, like just whatever. Yeah, it's the Help to Buy that's 250 unless you're in London. It's 450.
So I mean, you could just do the thing of like, I don't know, maybe do 20 years of saving and then buy a house pretty much outright, but take a £2,000 or a £5,000 mortgage out just so you can make full use of your bonus that you can get from the government, and then just pay your £5,000 off over the course of
12,
2 or 3 years.
I think 12 months is the minimum mortgage usually in the UK.
I'm going to say, because like if you think about it, when you get 20 years from now, you're probably going to high-paying end of your career with regards to your position in your work. So paying off a £5,000 loan in a year or 2 years is probably going to be next to sweet naff all, really, for you.
Yeah.
So there's definitely potential in it. I just don't think there's a lot of people out there, or a lot of banks out there that offer.
That's the issue, isn't it? We said it last week. It hasn't been well publicised. It hasn't been well marketed, and they've kind of left it up to the stocks and shares companies to spread the news, which it's not great. There's not a lot of people checking those websites for information.
So. For sure. But I mean, if you just do the quick numbers like we've just done there, it makes sense to do it. Yeah. It really, especially if you've got your home for the first time.
Yeah, definitely. Two products, and one is far superior to the other.
Yeah. Well, I guess the Help to Buy ISA was initially sort of like the beta version. Is that correct? Or the alpha version?
What?
The one that comes first.
The Help to Buy could be the beta test, couldn't it? Yeah.
Yeah, the beta test, and then obviously they've like refined it a little bit more for the LISA.
Yeah.
But obviously they could change the rules in the future, so it's not guaranteed to be the full 32 years that you could get that sort of.
No, yeah, I'm sure there's something written in small print somewhere, but.
Yeah. The government has the right to change this, that, and the other.
Right. What else have we got? Right. So do you not have access to a screen at all?
No, I've just got my phone at the moment. I don't have a laptop. I'm literally, this month I'm skint because I've just had my car MOT and service today, and then I've got to pay for my car insurance before the 26th, and that pretty much leaves me with nothing to be able to go out and buy a laptop or anything like that. So I don't have my screen in front of me. I literally stayed at work, and that's no fun.
So you were going to give a quick book review. Were you?
I don't think I've got any books this week that I've read. I mean, I could do Never Split the Difference, but
is it still a work in progress?
I've not really finished that review yet.
We'll push that on anyway, but yeah, that's pending. Yeah,
pending next week.
So we wanted to set up some challenges.
Did you have a look at that link I sent you with regards to getting some practice accounts open? You've been slack this week, boy.
Very slack. So that, you explain it. I'll bring it up on screen. So the challenge really is to open a practice account where there's a pot of fake money that you get to trade on the real markets, commodities, whatever.
Yeah, it's basically right. You imagine you're learning to ride the bike for the first time and you want your stabilizers on. They're basically giving you some money, some play money, I guess you could call it, to basically get used to their software, see how the markets work, see what sort of products they have that you can invest in or make money off. and then basically they give you a large pot, I think, maybe about 10,000 or 100,000. And then ideally you see how easy it is to make money off that. And you think, oh yeah, I'll put some of my own money in. But obviously the scale's a lot smaller because not everyone has 100K that they've got just lying around that they can stick into these things. So yeah, I guess we'll start with whatever starting sum they give us in the practice accounts. And then the idea is maybe over the course of a week or a month, we will set a certain challenge. For example, right, you can only invest in FTSE 100 companies. You can short them, you can go long on them, you can develop whatever strategy you want. But whoever comes out on top at the end of the month, who, for example, who has the most, who's made the most money, or who's lost the least, which it might be for the first couple of months, essentially wins. And I don't know whether we want to do a forfeit or whether you want to just throw a £5 each month or each challenge back and forth between us to whoever wins.
Yeah, I think it'd be good to put up a small little wager on it. Yeah, £5 or £10, and just play it by ear each month.
Yeah, have like a little mini league as well to see, like, obviously you're gonna have to carry over your pot to next month because it doesn't reset.
So that's gonna be a challenge.
Yeah, for sure. Got to try to get exactly the same each time we start each month.
So I've opened the ETX Capital link that you sent me, and it's like a demo account.
Yeah.
So there's two accounts on here, and there's the trade account, which is got access to 5,000 markets. Apparently, it's intuitive and easy to use platform. So.
Oh, well, that's what everyone says, right? We're not going to make it complicated, otherwise you're shutting out most of your market.
You're not going to click that link if it says, this is very hard. And
this is a very difficult software program to make money from. Oh, well, I'll give it a go.
And then you've got another link, which is the something like ETX MT4, which is a practice account for trading strategies. So I'm not really sure what that entails, but...
I think it was just 4 or 5 different websites you could use for free accounts.
I'll try sign up to this real quick then. Let's see what it looks like.
I mean, by all means, like we can get it set up for next week, and then we can actually, think about a challenge what we want to do for the month, and then started next week. I'll open my account and we can get going. And I reckon by all means, if people want to chirp up and say, right, let's see if you can make money in the German DAX for the week, we'll have to just do it for that. If people want to put suggestions forward,
definitely say that.
Then they can do that, and we'll just see how difficult it is, or see which markets we end up performing better in.
So before we get started, then there's a couple of small print statements at the bottom.
Oh yeah. It's just like the classic one that 70% of people who start this happen to lose money.
Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. So 78% of retail investors lose money when spread betting or trading CFDs. You should consider whether you understand how spread betting works or how CFDs work, and whether you can afford to take the high risk of losing your money. So I guess that's, we'll reiterate that many times.
Yeah, disclaimer.
Yeah, big fat disclaimer.
If we take your money, it's your fault, not ours.
The good thing about these things, the one that you sent me a link to, which is quite surprising, that if the company or website went bust or into liquidation, then essentially you're compensated by the financial compensation scheme in the UK, so that covers you up to 85 grand. Yeah,
85 grand? That's not really that much, really, compared to some of the funds that people have in these sort of spread betting accounts. And
well, I think it's that Financial Conduct Authority or Financial Conduct Scheme or whatever it is. They back a lot of banks, don't they? So
they do.
I guess it's like an insurance policy without having to pay for it.
Yep, you're probably right.
I guess you could cover your own funds with an insurance policy if something else happened. So that's like your basic level. If you want to take additional insurance, I'm sure there are options out there.
Fair.
But, right.
So yeah, we'll get that up and running for next week, and then we can actually rip some categories out there. We can have us first heads up.
So we got access to trade across forex, indices, crypto, shares, commodities.
Yeah. The full works, basically, I'd imagine.
It looks pretty interesting, to be honest.
Well, we'll have a play with it when we first get the challenge on next week. We'll have a broad spectrum.
Okay, fair enough.
So have you just opened an account now?
No, there's a couple of details that they want from me, so it shouldn't
Yeah. I can't imagine it'll take any more than 5 minutes to open one up.
Right.
That's what we're rolling on to next then.
Well, that's all we've got down on the list,
Oh, shit.
Flipping the screen around.
Yeah.
I don't know, is there anything that you can think of that you want to talk about this week?
Well, it's been quite quiet for me because I've not really been... Oh, actually, that reminds me, actually. Hurricane Energy. Yeah. I don't know if you read about them.
No, I haven't.
I told you about them maybe a year ago.
You said they're quite a small company.
So it's quite a small company, yes. They reckon they've found up to 2 billion barrels of oil west of Shetland. And essentially they've been working on an early production system over there to basically extract the oil, but it's from fractured basements. So do you know, like they've got the whole shale oil boom over in America? Picture that, but in subsea.
Okay.
And that's essentially what they're doing. And then just this last week, they've actually announced that their 2 oil wells that they've just basically put online for this oil production system have produced first oil. So that'll be 20,000 barrels a day. They've pretty much churned out of it for 72 hours. Yep. So it's a big step for them. But what's surprising is, prior to the news, it was trading at around 60 pence. And then since the news, it seems to have dropped back down to about 53.
That's strange.
So I don't really understand how and why that's doing that, because you'd have thought now that they've got oil pumping out of the actual well, it's been de-risked somewhat. But yet the share prices just seem to drop off. I don't know whether people are, top slicing and taking a bit of profit and expecting stuff to grow some legs now and go further forward, but I really don't understand why it's dropped by about 10%, and I can't put my mind on it. Although I suppose oil has dropped from about $70 down to 60 over the space of the last 6 weeks. So that might have a knock-on effect. But even still, it's gone from a non-producing company, non-revenue, to now producing nearly 200 million a year based on this early production system. And yet it's gone down. So I just can't get my head around it. So essentially what they're going to do now is over the course of the next, I think it's 6 months, they're going to ramp up production. They're going to start with about 45% at 9,000, and they're going to ramp it up to 65 and then 85, and then before it's starting to run at the full 20,000 capacity a day. So they're going to, gather data from it. They're going to get sort of like how the well operates, well pressure, the consistency of the oil coming out, how frequently it flows. Is there any issues with regards to the oil coming up? So they're just getting a lot of data from it. And then I reckon after that, there'll be some big oil majors that might say, well, hang on a minute, if you've got 2 billion barrels of oil down there in your acreage, and you've just proved it can flow for the last six months, I wouldn't be surprised if someone throws a cheeky lowball offer in there for the share price.
Well,
if it's still currently low.
So I just had a quick look online. So one of the things that I did at university a while ago was when you look at a company's sheet, you can see balance sheet.
Yeah.
So you can see how much debt they have.
Yes.
And it seems they've got quite a lot of liabilities at the minute. So
yeah, well, they're going to do, because they've not been able to produce any revenue for a fair few amount of years.
That's
right?
in excess of $250 million US.
That's quite. I don't think that's particularly high considering the revenue over the year now is going to be.
So I guess the issue is that right now, or when they last reported it, that was the figure, and they didn't have the cash levels within the company. So I guess that'll change as they're producing oil. They'll have cash inflow.
You would you would assume so, yeah. But I've essentially think that they've stepped out of the uncertainty now and they've actually started to produce revenue. So ideally, we should have kicked on from 60p instead of dropping back down. I get the anticipation, like if it was rising in anticipation of first oil and then they've got first oil, why is it now dropped off?
Well, we have this debate and all the time.
Like everyone, yeah, everyone knew that like first oil was the best scenario, so it was going up for the best scenario, and then it hit the best scenario, and now it's dropped.
So that
like
the only thing that I can think of is that they haven't reported anything. That's just news at the minute, isn't it? So it's like, they've.
Yeah, I guess so. Like I said, it's going to depend on the ramp-up period in the 6 months that they're going to get their flow data from. But I still think it'll go up. And then obviously if it all kicks off over in, the Middle East with regards to these tankers and Iran and the US and Saudi Arabia and the Houthi rebels, then oil might start creeping back up towards $100. And if it gets up to that, obviously Hurricane's profit is going to be going through the roof.
Yeah, looks like it's got some good future prospects at least.
Yeah, for sure. I definitely think so. So that were the other main news that I forgot to fill in when we first started the call.
Right.
Where are we at on the old schedule?
Well, that's all we had on the schedule for this week.
On the old script? You got nothing else to throw in there?
Short one.
Yeah, well, it's been nearly an hour on it, so I mean, we've got some good stuff down.
Yeah, I think.
Just disappointed you didn't get my graphs up, man, for all the work that I did on the LISA. There's some nice little figures there. I had a little bar chart with 3 different colours for the amount of money you'd have put in, money you'd have made on interest, and the bonus money you'd have had as well. And the little line graphs to show how much it would go up for over the course of 25 years. Oh, God,
it hasn't gone to waste. I'm going to edit that in post. No, it's useful, mate. It's definitely useful. Right. Have you got anything planned for the coming week? We always look back, but we never look ahead. Anything coming up?
I don't think so. No, there's no corporate news coming up in any of the shares that I've got invested in. Have you decided what you were going to do with that money yet that you took out from Clydesdale Bank?
I didn't take it out because I'm at a loss. No.
Didn't take it out. Oh, okay. Keeping it on until you get a
so
paper win.
They do pay a dividend. It's just down at about 1.2% on mine, which is pretty poor. I don't have many dividend-paying stocks at the minute, so I needed to cover my fees.
Yeah, the £45 a year or whatever it is.
It's going to be less than that for me. But essentially, I'm hanging on to it because it's a loss maker at the minute, but it still pays the div.
Yeah.
I had an ISA mature where I didn't withdraw all the ISA to previously, and I left some of it in there. So I started building up that pot. I'm gutted though, because if I'd have been with my company for 65 days, like longer essentially, this month would have been profit share month, which could have seen anything up to 1,500 quid before tax.
Oh, so yeah, that's a bit gutted.
Around that figure anyway. But yeah, it's a shame. So now I've got to wait till November and hopefully the company's still in profit.
Yeah. Hopefully it will be.
Should be. So yeah, that's interesting because getting a big lump like that would be nice to just drop that straight into an investment because I've got no use for it right now. So
yeah, it's not really part of your monthly expenditures, bills and whatnot, so you can quite easily dump it into the.
And I don't need to factor it into any of the wedding savings. Like I'm not reliant on that to reach the target for that. So that's primed for investment, should we say?
So what is what's the tax rate on that one? Is it stand sort of 20% or?
Yeah, so all it's taxed in national insurance.
Because I don't know how much you get taxed on bonuses. Is it still the same sort of rate as what your
It's
normal salary
exactly the
is?
same. It just comes in your monthly paycheck. So it
Mm.
shows up as if you'd worked loads of overtime that month, essentially.
Yeah.
Yeah, still susceptible to income tax, national insurance, and anything else, student loans. Yeah,
Yeah.
bye bye.
Did you get a chance to read today the idea that I had with regards to reviewing university courses?
Reviewing university courses. Well, no, where is
Yeah,
that?
yeah. That's in the ideas bucket in the old OneNote
The
tab.
ideas bucket.
Yeah. So basically, what I was thinking of, like, so the idea that I got from today is when we were talking about, you said, why am I in engineering, essentially,
That
and going through
stemmed
that, and
from a
then
different area of stuff. But yeah,
yeah,
it's
and I know it did, but it gave me the
okay.
idea for this, right? So you take your fees, don't you, that you've paid for your course, whether it's 3 years or
Yeah,
4 years, and then you take your maintenance loans and everything like that you might have had to purchase for the 4 years at that university or that institution.
yeah,
And then whatever degree or whatever course you've decided to invest in for your education, we'll then like review sort of the typical starting salary and then like how much money it ends up you can potentially end up being earning, how long it would take you to pay off your debt that you would have accrued while at university, what the current job market is like. For example, like when I went to university, oil and gas market was absolutely through the roof because oil was up at $120. By the time I graduated, oil had absolutely tanked to about $30 a pop, and no one was hiring, and there was an absolute massive flood of talent on the
yeah.
market. So it was really difficult to get a job. So I was not priced out, but I was, you know what I mean? If you have so much talent there available, then you're not going to want to graduate. Do you know what I mean? You're fighting for 6 graduate schemes in the UK with regards to oil refineries or
Well,
oil
it's the other way
institutions.
around, isn't it? So
But
like all the top talent has had to leave because no one's paying.
yes.
So now there's
Mhm.
an increase in supply and a decrease in demand. So the price has to
Yeah.
drop. So even those
Yeah.
top talent wouldn't have been getting the best money at that time. So they'll have been cutting their fees or taking a much lower
Yeah.
salary just to
So
secure
yeah, we could
income.
like review the course and then say like how stable the job market is for that particular thing. Like for example, if you said, "Oh yeah, I'm going into software engineering now. I want to study that at university," you'd be like, "Oh well, that's great because obviously the future is AI. It's going to be web development. It's going to be code writing and all
Yeah,
that sort of stuff." So your like aspects of the job market you would have thought is going to be they're going to be snatching you up when you finish university in 3 or 4 years' time. And then your salary is only going to increase as well. And if you've gone in for 4 years, and I think they're going to drop it down to 7,500 a year for the fees, that puts you at 30 grand debt plus whatever your maintenance fees are. Say that you go through 3 grand a year, so that's another 12 grand. So that's 42 grand that you're now down at what 6%? Is that
yeah,
currently student
6% a
loan?
year.
Yeah, so we could then do some quick numbers. Say right, well if you do this degree, you'd be good chance of getting a job at the end of the year. Course, it's going to be paying X amount of money. You should be able to pay off your loan after Y number of years, and then this is the sort of big numbers that you could earn if you do really well at it.
Yeah,
Do you know
that
what I mean?
would be interesting. Actually, we could.
And then do because it's still talking about finance because you're basically investing in your education there, right? In order to try and get a kickstart or a jump start in a certain
Yeah,
career,
definitely.
and you want to know whether or not the payout's worth it for what you're putting in at university, or whether you just think maybe I'm going to do something else.
Well, yeah, definitely. I think if you look at something and think you're going to enjoy it, but you're doing it because it's that's the best thing to do because I'm going to earn the most money doing it.
Yeah,
It's not always the best way to look at it.
it's not always the best way to look at it, but it's a start for some people. They want the cold hard figures. Do you know what I mean? Like, oh right, I'm going to get paid 70,000 a year to be
Yeah,
a dentist. Right, I'm going to do dentistry because 70 grand a year. What can I do with that? Even if I hate my job or even if I don't like my job, 70 grand's going to make it a little bit easier than say if I'm struggling to make ends meet down at 22K because I'm a HR assistant. You know what I mean?
yeah. No, it could be an interesting exercise, and I know I like producing graphs, so I'll make sure I get those up on screen next time.
Well, yeah, I'm going to be relying on you because I'm currently looking through a phone device until I decide to get a laptop sorted. So that could be anything between 2 months or a month or whatever before I can get that
No
sorted.
worries. I think it works. Make do. So yeah, that's fine.
Work with the tools.
Yeah, how do you want to kind of track the trading then? You're going to take some print screens?
Yeah, you can take some print screens. I think that's probably the best thing to do.
Yeah, drop them in the OneNote and then I'll bring them up.
Drop them in OneNote. Put a couple of like captions there to explain what you've done, why you've made this trade, what's your reasoning behind the trade, and then you can do that for the week or the month, and then see how it goes. You know.
Yeah, that sounds good.
I reckon that's probably the best way to do it. Yeah, like you say, is take snapshots, and then a little caption there just so you can jog your memory, and then we can basically, summarize it whilst we're streaming.
Cool. Sounds good to me. All right then.
Yeah, buddy.
I don't think there's anything else from me this week.
No, I don't think there's anything else from me. Have you figured out how to get the chat up whilst you're streaming?
I've literally just been checking in on the website, so.
Oh, okay.
Yeah, I keep clicking back to the webpage.
Yeah, no randomers coming in this week to say hello, and then we're going to completely ignore them with terrible audio and losing massive frames.
Unfortunately not. But this week we haven't dropped a single frame. The quality looks half decent. I'm hoping we managed to capture it all on the record.
Good.
Yeah, and we'll see shortly.
Yep, I guess that's it for the week. We'll fill you in next week, hopefully with a couple of new spread betting demo accounts that we've got to get this challenge going on. Give you some more news if anything arises that we think's worth talking about. And then maybe decide a topic, and I might have a book review on Never Split the Difference, but I'm not promising anything.
That sounds good to me, buddy.
All right, take care then, everyone.
All right then. Yeah, thanks for tuning in if you did tune in, and if not, we look forward to seeing you in the future. Good night.